elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground, where we specialize in small and mid-cap companies with high growth potential. We're going to be taking a look at a stock here that's in the actual AI revolution thesis play, a picks and shovels play, if you will. Poet Technology, ticker POET. This trades on the NASDAQ for $7.04 a share. Market cap is $1.08 billion. Short interest here, a little bit of short interest, 7.67%. Nothing really crazy, all right? We got Seeking Alpha analysts got this as a buy. Wall Street and the Seeking Alpha quant system have this as a strong buy, all right? We're going to see if Goofy agrees, all right? We're going to take a look at the business model and some different angles here, and I'll look at the investment proposition and so forth. All right, well, I've already looked at it, but we're going to talk about it, all right? So this is a Canadian company, all right? They're headquartered in Toronto, Canada. 56 employees, very small company, been around since 1972, all right? So for all extents and purposes, maybe took about 50 years to get to this level to be on the market, all right? They are a semiconductor in the IT space, and they design and develop and manufacture semiconductor products, and these products and these semiconductors are more spec tailored towards different functions that result in more compute and recognition of different pieces of machinery and so forth, all right? And they develop and, they also design and develop the photonic integrated circuits in the optical engines. So there's that. So pretty much the idea is they're going to participate in the upgraded retrofit of data centers to fuel the AI revolution, all right, as a picks and shovels play. All right, let's dive into it, all right? We'll do a sniff check on their balance sheet because that's the first thing I look at. 7.07 mil in debt, 313.40 mil in cash. A lot of cash, all right? This company has a lot of cash on the balance sheet. Enterprise value is sitting at 768.75 million. All right. So from a price to sales standpoint, you're looking at trailing of 610 times and a forward of 107 times sales. Doesn't really paint too much of a picture because you look at their financials and they're not doing much in sales. In fact, you can almost consider this a pre-sales company, given what the proposition of sales is going to be. All right. SG&A's got an uptick, and so does R&D. Not really surprising with their business model. Op income is negative 42.1 mil. Shares outstanding. Let's actually look at it from a quarterly standpoint because I'm tracking they just raised capital, which we'll talk about from their last earnings and so forth. We went from 89.8 mil in the quarter before their last reporting to 124.1 mil. So substantial raise in shares outstanding due to issued capital, which we looked at here. If we go to their balance sheet on a quarterly basis, they went from 92.7 million in cash and cash equivalents to 313.4 million in cash equivalents. That's where the difference of the delta, that's where that cash came from. They issued shares and so forth. All right. So well capitalized. Let me look at their cash burn. Um, so a little bit of bumpy up and down cash burn here. Accidentally spraying a profit here in March of 2025 on that quarter reporting. I like the idea that although that wasn't intentional, it always makes me feel good that a company can accidentally be profitable. Okay? That makes me feel good, all right? Sometime during the actual S curve of their execution, the company's margins will get impacted as they're scaling, and then it will be a thing of they won't accidentally become profitable during those timelines. But all in all, somewhere along the trajectory, if I see a little accident of, oh, we accidentally profited 6.3 million, that makes me feel good about it. If we look down at their actual cash flows, positive free cash flows for the most part here. We go on an actual yearly basis here because they've been around a little bit and they've been positive free cash flow since 2024. All right, a couple years now here. All right, so that that makes me feel good about it. All right. Now let's take a look at what's going on, all right? Because with the actual capital raise here, all right, with 225 million in financing, all right, that pretty much gives them a long runway to deploy their new products for their optical engines and their lasers, if you will. I like that, lasers. Um, so here's something you have to consider. All right, let's talk about some different things because I'm tracking they did not have an actual earnings call. This is one of those companies that just does a press release of their earnings. I'm okay with some of those, depending, but all in all, it pretty much gives me the stance that they don't really like to invest in investor relations and so forth, and it doesn't really make it um, too digestible to the retail investor, and that could hold the company back from garnering a cult following within the actual equity. And I think that's really important. That provides good support to an actual particular stock and could provide an actual rocket. I love to see retail cult stock followings and the retail cult stock following. They're buying at the bottom and then it starts rocketing and then the street is paying the obscene prices from the index funds. That's the stuff that turns me on. All right. I'm not quite sure that this is going to be one of those companies, so there's that. All right. When I look at their investor presentation deck, this was from Q4 of 2024. I'd imagine not much has changed. The mission still aligns. They have some strategic partners, Mitsubishi, Foxconn, so forth. But all in all, their main objective is to supply compute power to Magnificent Seven. And that's a lot of these, you'll see this with a lot of these smaller companies, especially in the semi and different tech categories. Um, so they're they're actually, how do you say, they're transceivers here. They're expecting, 800 gigs expected to reach 5.3 billion by 2028, a 65% CAGR. I can see it. I think that compute power and demand for speed is definitely going to be the kryptonite of the Mag 7, and the Mag 7 are very aware of it. In fact, so aware of it that their capex levels are going through the roof, and they're willing to sacrifice market sentiment against their stock to support that capex to secure the investment for the compute power, if you will, in the data center arena. So, these small picks and shovels could garner and secure sales prematurely against the actual end product of this whole AI revolution. Every investment is expected to have a return, and it automatically leads down to the consumer one way or another. I don't care if you're a small B2B business, it still is going to come down to that, all right? Whether you're selling little microchips to put in the Mitsubishi cars, or you're doing you're retrofitting some laser tech into the semiconductors in the AI data centers for machines to reciprocate off different things. All in all, it's still going to lead to the consumer one way or the other, all right? So that's something you have to think about as an investor, all right? Now, I think that they could do a better job with their presentation, all right? As far as not so much the slide deck or anything, but updating the actual presentation slides. I don't need I don't need a quarterly presentation slide deck, although that would be nice. But I don't but come on. End of 2020. I mean, this is, over a year and a half ago or so. All right. They haven't even put out a new slide deck. What's up with that? But whatever. All right. So that's something to consider. The real question about it, when I look at their actual management team, I see a bunch of old people. And when I go to their actual insider ownership levels, bear with me, 0.13%, 13 basis points of ownership. Institutional ownership comes in at 7.28%. So low institutional ownership and insider ownership. I like low institutional ownership, but I don't like to see that low of insider ownership, all right? Even companies can accidentally have 1% of insider ownership. So you're dealing with a management team that doesn't have much of a stake in here. Let's talk about the investment proposition and their actual growth estimates, all right? Growth estimates on their sales are expected to rocket at the 8 to 700% CAGR year over year. But, 700% of a little grapefruit is not much. To get the big cake, they're going to need to CAGR year over year and maintain this for a while. If they maintain 500% plus CAGR on revenue to sales, and this company's enterprise value is 768.75 million and a $1 billion market cap, they can be looking at, in about 5 years, they could be looking at anywhere from 3 to 5 billion in sales, depending on their actual profitability portion of their EBIT and EBITDA and net income margins. That will dictate a price to sales multiple and PE. All right. So what happened with this stock? What's going on with it? What do I assess? Is this a good investment? Is it not? And so forth. All right. So I assess that their IP and tech was recognized. So once the IP and tech is recognized, the actual valuation of that is embedded into the actual equity. The market has realized their IP and tech. Thus, they get the opportunity. The stock will go up. The market will boost the stock up. The management will issue out shares and raise capital to reset the investment proposition to a whole new runway, which has happened. Okay. And from here, it's all going to be execution. So let's look at what they've done on earning consensus from a historical standpoint. You see slews of misses all the way down from quarter to quarters in the past. So that doesn't give me a warm and fuzzy. I don't like the setup. This is and disclosure. If I don't have a share in this company, I don't hold a stake. So investors buying in right now are buying in at the valuation in IP tech that's recognized. And success is going to be determined on management execution and feeling the demand or harvesting the demand for their products. All right. I think that there is a lot of executional risk there. This is going to be, whether it's a good investment or not, is going to depend on whether the management team executes well or not. My bet is they're not going to execute well. They don't have too much of a stake in it. They're older. They don't, their actual revenue and sales or their actual historical reportings have been several misses across the board. And you see this a lot with tech companies. Their IP and tech will kick in, and their valuation and their actual valuation will skyrocket, but their execution will be poor because the actual leadership and management is so focused on getting the actual tech to be where it's at, getting the product to be where it's at, and then they have to transitionally pivot towards actual sales of execution. And you saw that with Navitas, right? The difference between this and Navitas is I invested in Navitas before their IP and tech was realized. Their value, the market realized their value. So therefore, I garnered premium of gains off that. Okay. And this is different. Investors coming in now, they're coming in after the IP and tech is actually valued by the market. So the market has a tendency, in my experience, to market IP and tech maybe at about 75% of intrinsic value. So I think that maybe with the full-blown fair value premium of IP and tech in this company, right on the top of my head is probably 1.25, 1.30 billion market cap. Even then, they fail and slip up on some execution. This stock is going right to about $4 a share, easy. All right. Risk to bankruptcy is probably minimal with this balance sheet, but all in all, this can, I don't think it's for me, that's just me. All right. So I hope you guys got value out of the video. Like and subscribe. Comment down below on what you guys think about Poet. Check out my Patreon. All right. $14.99 a month. Really can't beat it. I know that sounds suspiciously like 15 bucks a month. Do me a favor. Click this button up here and save 20% by paying annually. You really can't beat it for the value. You get community of investors, more direct access to me, my stock picks, all different types of exclusive content on there. And we're pretty close-knit bunch on there on that Patreon, all right? Got a great group of high-level investors, all right? So who knows, maybe one of those investors will rub off on you and you can get some mentorship there if it's not me, all right? So with that being said, thank you all for your support. I love you all, and until the next time, take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.